All right, guys, how is everyone doing today? Give me a second here to start this up. All right, guys, so I am going to be going over today the 8-step sequence to getting to making money in Forex, honestly. Forex trading, it's not really that hard. It's really not. It's just you have to follow a particular methodology, and it doesn't really matter what that system is itself. It's just um, the way that you do things. I don't necessarily teach people a particular system of trading. Although I do teach them how to trade a particular system, it's not what my intention is. My intention, honestly, is to teach people how to trade no matter what system that they're using. Not to provide them a system or a signal service that they are, pretty much relying on. It's, these are the core foundational principles of trading. And then at that point, they'll be able to use that information and use it with any type of trading system. So that's really what I'm teaching. So going through the 8-step sequence, the 8-step sequence is just that. It's 8 steps. The first one, number one, is learning. So the first thing that you have to do is learn Forex, and you have to learn the fundamental principles that is Forex. So you have to learn things like leverage, how to use leverage, what leverage is. You have to learn things like money management. A lot of traders, they don't understand that there are a ton of money management systems out there. They only believe that there's, for the most part, that there's just one type. This whole 2% rule, which the 2% rule is nothing more than fixed fractional money management. I'm going to take this trade and I am going to put on 2%. I'm going to risk 2% of my account for this particular trade. That's not really a good type of money management system. There's other ones out there. The one that I personally use is called smoothed ratio money management. And smoothed ratio is just pretty much a variation of fixed ratio money management. Not fixed fractional, fixed ratio money management. It is a big, big difference, a very big difference. But those are the type of things that you need to learn. You need to have a good foundation in Forex trading. You have to know who the players are, in the Forex world. You have to know what risk management is, money management. You have to know about, trading plans and backtesting and all these different things. So number one in the Forex 8-step sequence is really any trading, is learning. You have to learn the foundational principles of Forex. Number two is creating a trading plan. Now, I would love to say that, that would be number one, because not having a trading plan is the number one reason why traders fail, in my opinion. And they have, a lot of traders think that a trading system is their trading plan. How they enter and exit the trading system, the market, that's their trading plan. And unfortunately, it's not. A trading plan has 15 different components, and only one of those components is how to enter the market. All right, it doesn't make up the entirety of the system of the trading plan itself. Give me just one sec, guys. All right. Sorry. Just seeing something pop up here on my screen. But yeah, that's just one particular system or one particular aspect of a trading plan. There's a whole bunch that goes into trading plans. So, after you learn, you have to create a trading plan. And that trading plan has to be really extensive. It has to be really detailed to the point where, my personal trading plan, I could hand my trading plan over to, say, my son, and he could trade. And if I taught him, if he learned that, if he taught, can't even think right now, guys. So if if I give him my trading plan, he would be able to use it exactly as I do. And we would be able to put on the same trades. Give me one sec. Trying to read this. What's up, guys? Welcome. So that's number two. So number one is learning about the foundational principles of Forex trading. Number two is creating a trading plan. You absolutely need to have a trading plan, and it needs to be incredibly detailed. My personal trading plan is roughly about 38 pages long. So it goes through absolutely every detail of my business. And this trading is a business. And I stress this a lot in my podcast and in my teaching, that trading is a business. It's not a hobby. Like I said in other videos and podcasts, that a hobby is something that takes money from us. It's not something that gives us money usually. As a matter of fact, I don't know of any hobby that gives us money. A hobby, if I want to go rock climbing at the local indoor rock climbing facility here, it's something that I really like to do. I have to pay money to do that. If I want to go, play soccer, then, I've got to buy shoes. I've got to buy, the right equipment, and, maybe you have to join a league where I have to pay some money to join that league, and so forth. It doesn't usually give us money. Whereas a business is designed, if run properly, to give us money. And every single business in the world that is profitable, that is successful, has a plan. And in trading, that's our trading plan. So number two is have a trading plan. Number three is backtest that plan. Make sure that plan works before you start trading it. I see a lot of traders time and time again. I get over roughly 100 emails a day, every single day, from traders asking questions. And I would say a good maybe 10% of those people have purchased or gotten somewhere a trading system and gone out and traded it live. I mean, it's not very intelligent to do. You have no idea if it works or not. Just because someone said that it worked doesn't mean that it's going to work. So you have to backtest that plan. You have to make sure that it works and make sure that it works for you. I have a particular trading system that I use for entering and exiting the markets during times of consolidation. And it's called harmonic pattern trading. So if that works for me, that's not necessarily going to work for you. Maybe you don't have the ability to spot patterns in the market like I do. So it's not going to work for you. So just because you have that system, when it comes down to the wire and you're live, how are you going to be able to see the particular patterns that you need to find, that particular trade setup, analyze that trade setup, and be able to do it efficiently and effectively if you don't, if you can't do it? So you have to backtest that plan and make sure that it works. And not only that it works, but it works for you and it has a positive expectation. That's another thing that we'll talk about in another video is positive expectations. Positive expectancy. Positive expectancy. So that's number three, is backtest that plan. Number four is learn your trading platform. When it comes to demo trading, I'm not a big fan of demo trading, even though I've done it in the past, and that's actually how I started. When I first started trading in the Forex market, I had already been trading for a couple of years at that point, and I started trading in the Forex market. And I was demo trading, just like everybody else, because that's what, at that time, I believed. And I traded for, we'll just say 4 months or so. And my wife, she just kept hammering me, to go live, because at that point, I was already profitable, in demo trading profitable. And she kept telling me to go live. So eventually I did. But I think in the end, it was slightly detrimental to my growth. I believe that a demo trading account is good for just a couple of things. One, to help test your theory, to help test your plan. Two, so that you can learn your platform. And that's number 4, is learning your platform. Whatever platform you're going to use to actually execute trades on. So if let's say you're on TD Ameritrade and you're going to trade with the Thinkorswim platform, then you need to use that to demo trade enough to the point where you understand exactly how to execute trades, how to place those trades, how to place stop loss orders, how to place, your targets and so forth. That's what you need to use a demo account for, is to learn the platform. Once you learn the platform, once you let's say, a couple of weeks down the road, you're testing this, you're demo trading it as much as possible. In a couple of weeks, you should know exactly how your platform works. If you don't know in a couple of weeks, you haven't really been on it much. I could take any platform and within a day know how to properly execute trades. So it doesn't take that long. So you need to take that platform, learn absolutely everything that you need to know in order to execute trades, how to do your technical analysis and so forth, and then get to live trading. So number 4 is learning your trading platform. Number 5 is learning about risk management. All right. Risk management is a huge part of trading. Our goal is not necessarily to make money. Our goal is to preserve capital, in essence. Rule number 1 of trading is don't lose money. All right. That's where risk management comes in. Now, I'm not going to get heavy into what risk management is and how, and everything that you need to know about risk management. Just know that you need to know about risk management, how to preserve your capital. And, the way that I think about trading, when I see a trade set up, let's take a harmonic pattern, for instance, because I'm a harmonic pattern trader. If you're a harmonic pattern trader and, you see a harmonic pattern come up in the market, well, there's a lot more that goes into just placing that trade. It is not just, oh, I see it, let me click, buy or sell and go with it. It's a harmonic pattern. No. All right. I look for ways not to get into that trade. And it's a slightly different mindset because I'm trying to build a case for entry. I'm essentially looking to prove to myself that that trade is not going to work out. And when I've built a case and I can't justify that it's not going to work out, it has a higher probability of success, that's when I actually enter the market. All right. So just a recap real quick of what we've gone through. Number 1 is learning the foundational principles of Forex, everything that you need to know that underlines Forex trading. Number 2 is create a trading plan. The number 1 reason traders fail, they don't have a plan. Number 3 is backtesting that trading plan. All right. Knowing that it works and it works for us. And that way, when it comes down to real time, we're going to be able to actually execute those trades. Number 4 is learning your trading platform. Definitely have to learn your trading platform and get out of the demo trading for 6 months, a year. I talked to a guy who he's been trading, demo trading for years now. And it's slightly insane. You should not be demo trading for that long. Number 5 is risk management. Number 6 is money management. Now, like I was saying earlier, and I've said in multiple podcasts and so forth, most traders only know one type of money management system, right? And that's the fixed fractional money management system. I'm going to risk 1% of my account on this trade, or I'm going to risk 2% of my account on this trade. That's not necessarily what we should be doing. All right. What we should be doing is exploring different money management systems. When I first found out about the particular type of money management system that I use, I had sent all of my data from my trading to someone, a trader that I know. And he emailed me back and he's like, man, you're a brilliant trader. You're a great trader, but your money management sucks. And I was like, wait, what? I mean, you can see every single trade that I've put on. I've put on, 2% of my account, for that trade. And, I was using a fixed fractional money management system. And he's like, yeah, that's your problem, is that you're using a fixed fractional money management system. And he gave me a book. And the book was called The Trading Game by Ryan Jones. And if you don't know what that is, you need to go get it. Right now, go on Amazon, and it's called The Trading Game. And the book is all on fixed ratio money management. And it is a lot different than fixed fractional. But fixed ratio, give you an idea, all right? For 1 year prior to my use of fixed ratio money management, I was using fixed fractional, and I was doing very, very well. And I believe that year I had done something like 24%, I believe. Something like that. Something like 24%. That was great. I mean, what investor doesn't want 24%? Every investor wants that. So I had run numbers with the help of one of my friends and my father, who are really great at Excel spreadsheets. And they calculated with the exact same trades that I had put on that year. Instead of 24%, I would have made, I think it was like 180% or some ridiculous number that year, had I just used this particular type of money management system. And in the data, it was showing that there was a massive kind of drawdown at a certain point during the summer months. And to deal with that, I had found out, once again, from my friend who's a trader, who gave me the book, about smoothed ratio money management system. And smoothed ratio is just a slight variation of fixed ratio, but it's a little bit different. All right. Not going to cover it. I can cover it in another video if you'd like, but just not today. But it blew me away. In 2015, I had a year, it was my best year yet, and I don't know if I will ever duplicate it or not, but I had, in 2015, I had made 1,922% on my account. And I mean, it was just insane. Last year, I didn't do as well. I did about half that, but I also wasn't, strictly in the market. I'm teaching and so forth. So I wasn't able to spend as much time in the market. That may be a contributing factor. I don't know. But last year I did just over 900%. So 1,000% less. But either way, much better than just a mere 20%, 30% that a lot of traders get if they make money. We got to remember the 90-90-90 rule. 90% of traders lose 90% of their money in the first 90 days. And honestly, I mean, that's the rule. I don't really subscribe to it, because I think that rule is higher. I think it's more like 95% of traders instead of 90%. So that's number 5 number 6 is money management. Number 7 is trade live. Our goal is not to demo trade. Our goal is to make money, all right? To grow our account. That is the nature of what we're doing, all right? Is to grow our account. You can't do that if you don't trade live. So going back to that demo trading, you can't demo trade for years and years and expect to get anywhere. Eventually you just got to jump in and do it. So, number 7, you just have to go and trade live. And granted, that could be small amounts of money, very small amounts of money. If you've got a $25,000 account, you can still trade, one micro lot if you want, just to be in there and using live money, because it has a psychological connection that demo trading doesn't have. On demo trading, I can have a $200,000 account, end it that quick and be okay, reset and go again. And it doesn't connect with me on a psychological and fundamental level, whereas live trading does. Similarly, when I was very heavy into training self-defense, I teach self-defense. I've been doing self-defense since I was 4 years old. Been doing it now over 35 years. And one of the things that my instructor used to have us do is train with live weapons. All right. So when we were doing knife training, we were training with live knives. So if we messed up, we would get cut. All right. And, these were kind of dull. They were real blades, but they were kind of dull. So, it didn't cut us down to the bone, but we got cut in the end. And in the end, it made us learn so much better and so much faster. Instead of something taking, a month to really get down and ingrained in us, we learned in minutes. And that's really what trading live does for us, is it helps us learn faster, because now we have that psychological connection to that money. And if we lose some, we have to deal with that on that psychological level that demo trading doesn't give us. And you will lose money. That's just plain and simple. You're going to lose money. Every single trader in the entire world loses money. How much you lose is a different story. How often you lose it is a different story, but you're going to lose money. You're going to go through a drawdown. It's just the nature of the game. All right. So going back through the key points, the 8 steps, I know we haven't gotten to 8 yet. Number 1 is learning the foundational principles. Number 2, create a trading plan. Number 3, back testing that trading plan. Very, very important step there. Number 4 is learning your trading platform, exactly how to execute trades perfectly, flawlessly, every single time. Number 5 is learning risk management. Number 6 is learning money management. Number 7 is trading live, and then number 8, which is probably the most important, is being consistent. Everything we do, we have to be consistent at. When we're trading, we have to be consistent with how we enter the trades, how we exit the trades, what we do every day. Every morning I wake up 4:30, 5 o'clock in the morning, and that is my time to wake up. I kind of give myself a half an hour breathing room because sometimes at 4:30 I just can't make it out of bed. All right. But my real wake up time is 5 a.m. But I've got multiple alarms between 4:30 and 5 to say, hey, dude, it's time to get up, get going. This is what you got to do during the day. And then throughout the day, I break up everything in certain segments so that, I can accomplish everything that I need to do. And every day it's the same thing. I want to be consistent with everything that I do. Do I once in a great while not stick with my plan? Yes. It's going to happen. We're human. We're flawed. But for the most part, if you have a plan and that plan works out, you have to be consistent. And that, you have to be consistent as much as possible. So that's number 8, is just being consistent. I don't really know, why people that they have everything else. They have 1 through 7. They know everything about Forex. They have a trading plan. They've back tested it. They know their platform. They know risk and money management. They are trading live, but yet they're inconsistent every single day. I was talking to someone that I know, a friend of a friend, and they've been trading for something like 10 years now, much longer than I have, but they're still not consistently profitable. And the reason that they're not consistently profitable is because they're not consistent. They enter the market completely different every time. They have their plan, and their plan says that they're going to enter, what's his main trading strategy? I think it's something like, fib level. If the market moves to a 61.8% Fibonacci retracement level, then he's going to enter the market. But yet, when that happens, when he sees it moving up to the 61.8, maybe instead he, shorts or buys at the 50% retracement, all right, or the 88.6, whatever that case is. He's not consistent, and because he's not consistent, he loses money consistently. That's his way of being consistent, is losing consistently. So that's number 8, guys. If you want to ask questions, I can see it over on Instagram. And I still haven't figured out, again, I'm using this new system. I still have not figured out how to do Facebook comments. So if you want, actually, give me just 1 second. And I am going to look at something here. I've got this live going on. Um, Actually, yeah, I can actually look at comments on Facebook. So if you're on Facebook, you can ask questions. If not, I'm going to be online tomorrow. I'm going to be online every day, and I figure between 12 and 12:30 is a very good time. Let me know what works best for you. I'd really like to know what works best for you. What particular platform you're on the most. Are you on Facebook? Are you on Instagram more? Are you on YouTube, Periscope? Now, I'm not currently streaming to Periscope right now, but I will be very shortly in the future. So um, that's what I've got, guys. The 8-step system to making money in Forex. It's not hard. Everybody makes out that trading Forex is such a hard thing, and there's so many people saying, "Oh, Forex is a scam." I hear this every day. I was at Publix, which is a grocery store here in town in Orlando, and someone overheard me talking about Forex trading, and they literally came up to me and were like, you shouldn't be doing that. It's such a scam. I've lost so much money, trading Forex, and started to talk to them and realize exactly why. They never had a trading plan. And I gave the guy my card. Maybe I'll hear from them. Maybe I won't. They wouldn't give me their number, so I couldn't call them. But that's what a lot of people think, is that Forex is a scam because they don't have the ability to make it in the market. And the reason that they don't is because they're not willing to do what the 5%, maybe 10% of us are willing to do. All right. Like I said, 90%, maybe pushing 95% of traders lose their money. All right. They're not profitable traders. And the rest of us that are profitable, we're just doing things that, and doing things consistently that everybody else isn't doing, So that's the 8-step system, guys. I will be on here again tomorrow, 12:30. And let me know what time works best for you and platform that works best for you. All right, guys. So I appreciate everybody that was here and is here. And we will see you all tomorrow, guys. Take care.